1.06 lakh crore rupees. That is the exact amount of wealth wiped out from the Indian middle class in just one financial year. And the financial media calls it market volatility. I call it a slaughterhouse. You log into your brokerage account. You check the screeners. You analyze the volume spikes. You think you are playing the game. But you are not the player. You are the product. Every single time you place an intraday trade, the ecosystem is mathematically programmed to bleed you dry. They feed you a highly engineered lie. Influencers in rented supercars tell you that with enough discipline and the right course, you can conquer futures and options. But the real data, the data they desperately try to bury beneath flashy UI updates and gamified notifications, tells a terrifying story. Today we are going to expose the F&O trap. I will show you exactly how the house always wins, the hidden predators stealing your liquidity, and why your trading account is destined to hit zero. No generic advice, just the raw, mathematical truth. Let's talk about your so-called edge. You spend hours interpreting open interest data. You stare at order books. You refresh your screeners to catch that perfect breakout. You genuinely believe you are spotting a trend. But what you are actually seeing is a perfectly constructed mirage. The retail brokerage model is built on a very specific psychological trap, the illusion of control. When you open that app, the flashing green and red numbers trigger a massive dopamine hit. It feels like skill. But the reality is that the derivatives market was never designed for you. It was built for massive institutions to hedge multi-billion-dollar portfolios against global risks. When a retail trader uses these exact same tools to place directional bets, it is like borrowing a Formula One car to navigate peak Bengaluru traffic. Fast, dangerous, and completely suicidal. You are bringing the spoon to a gunfight. You do not have access to real-time, low-latency data feeds. You do not have algorithmic systems executing trades in microseconds. You are trading against entities that can map out your stop-loss limits before you even click confirm. And the brokers, they know this, but they will never, ever stop you. Because every time you buy or sell, they collect their toll. Let's look at the cold, unforgiving math. The Securities and Exchange Board of India recently released a report that should have stopped the entire country in its tracks. In the financial year 2025, individual traders in the equity derivatives segment incurred net losses of 1.06 lakh crore rupees. That is a 41% surge from the previous year. Let me contextualize that for you. The average loss per trader jumped to 1.1 lakh rupees. For most of the hard-working Indian middle class, that is more than a full month's salary, completely evaporated into thin air. And here is the most terrifying statistic of all. 91% of retail traders in F&O recorded net losses. 9 out of 10. If you sit in a room with 10 intraday traders, 9 of them are bleeding out financially. Over a 4-year period, from FY22 to FY25, retail investors have collectively lost nearly 3 lakh crore rupees. And who exactly is suffering the most? It is not the ultra-rich. 43% of these traders are under the age of 30. Young Indians, YOLOing their meager savings on weekly index options, blowing up their entire capital base. Furthermore, this financial cancer is spreading. Individuals from Tier 2 and Tier 3 cities, the B30 cities, now make up over 72% of the total F&O trader base. These smaller city traders accounted for 51.3% of the total turnover, but they were responsible for a staggering 68.1% of the total losses. Over 75% of individual F&O traders in FY24 had declared an annual income of less than 5 lakh rupees. The people who can least afford to lose are the ones bleeding the most. Pause this video, take a screenshot of this data, send it to that friend who keeps telling you about their foolproof option buying strategy. Force them to look at the math. So, if 1.06 lakh crore rupees was lost by retail traders in a single year, Where exactly did the money go? Wealth does not just disappear. It transfers. While the Indian middle class was busy wiping out their savings, institutional players were quietly orchestrating a massive wealth extraction. Foreign portfolio investors and proprietary trading desks booked massive, multi-core profits. How? Because 97% of FPI profits and 96% of proprietary trader profits came directly from algorithmic trading. Machines. Unfeeling, hyperfast algorithms explicitly designed to exploit human emotion, slow reaction times, and structural inefficiencies. Look at the Jane Street anomaly. A major US-based algo trader made total gains of nearly 36,700 crore rupees over just 26 months. Let that sink in. SEBI alleged that nearly 4,850 crore rupees of those gains were illegal, involving regulatory violations or access to price-sensitive information. While retail traders face massive tax risks, audits, and 91% loss rates, global giants are quietly minting billions. You are not just fighting the market. You are fighting ghost machines that know exactly when you will panic. But even if you somehow manage to predict the market, even if you dodge the algorithms, the system still taxes you to death. It is the silent killer, transaction costs. Loss-making traders incurred transaction costs amounting to approximately 27% of their gross losses. Let me explain what that actually means. You are not just losing money on bad trades. You are actively paying the broker for the privilege of losing your money. On average, individual traders spent 26,000 rupees per person on F&O transaction costs in FY24 alone. Over a 3-year period, individuals collectively spent about 50,000 crore rupees just on transaction costs. And where does that money go? 51% went straight to brokerage fees, and 20% went to exchange fees. The brokerage apps do not care if your portfolio is green or red. They only care that you trade. They want you to keep refreshing that open interest data. They want you to stare at that volume chart. Because every single click, every single order, generates guaranteed revenue for them. You are being subjected to death by 1,000 cuts. And the final nail in the coffin, the government. F&O income is treated strictly as business income under the Income Tax Act, even if you are a salaried employee. If your turnover crosses certain limits, or you try to claim your massive losses, you are suddenly hit with complex tax audits. You must maintain books of accounts. You face defective return notices just because you tried to play a game you did not fully understand. The F&O market is not a path to financial freedom. It is a highly optimized, legally sanctioned wealth transfer mechanism. It systematically extracts capital from the impatient, under-resourced middle class and feeds it directly into the pockets of institutional algorithms and brokerage houses. The government knows it, the brokers know it, and now, you know it. If you have an active F&O segment on your account, disable it. Stop funding the slaughterhouse. Build real wealth through extreme discipline, not desperation. They won't tell you this, but I will. We expose the traps so you can build real freedom. Share this video. Save yourself. Wake up.